Sir MoneyPigTrading. Today, July 24, 2021, we're going to discuss about how to trade options. 5-2 is how to buy vertical spread and butterfly spread options in TDAmeritrade ThinkorSwim platform. A lot of members and people following us on social media are asking, so let's talk about it. And it's a pretty common question, as it's a little less intuitive compared to long calls options or put option, where we actually have a video to discuss in the links provided here on the upper right corner. So here in the last video, we mentioned about Roku, and we're looking to long Roku, right? Because we think the price will go up on July 23rd. So here what we do is you type in the Roku ticker, and then basically it will give you the option chance, right? So you click on the option chance, you're gonna see a lot of different strike price. So if you want to simplify, you don't want to see that many strike price, you get on the strike, just click on 14, it will only show you 14 strike price. But here, for tutorial purposes, I'm just choosing all. The other thing you should look at is when you buy a vertical spread or butterfly spread, the volume and open interest are very important, because if you're looking to buy an option strike price with a very low volume, especially in a butterfly spread, that can skew your contract price, like S&P price, become very wide. You're going to see some very weird price action as well. Here, if we check on the volume, they all look pretty decent because Roku is a very popular stock, so nothing to worry about. The other thing actually you should check is the implied volatility. So let's click on it. So basically for vertical spread, usually theoretically, if the IV is above 50%, what you should do is using credit spread. A lot of people are asking why you never use credit spread, because both debit spread and credit spread in vertical spread strategy requires margin account. However, if you're using debit spread, you don't really need a margin requirement. But if you use a credit spread, you will have to do margin. And I know a lot of people are having small accounts and do margin requirements and calculations, a whole level of complexity. So for the sake of simplicity, always use debit spread in my case. But you should know, like, above 50% of the credit spread can provide more profitability. While below 50%, debit spread is actually even a better case. So here, let's just use debit spread as example. You are bullish on Roku here, and when Roku was traded at 440, you were betting on Roku's going up on July 30th to maybe 480. So what you're going to do is you can construct a vertical bulk debit spread and long it. So what you can do is right click on the first leg, 460, and you right click on buy, and you search the strategy as vertical, and then you can see it will say it's a vertical spread. You can long the first leg 460, and then sell the higher strike call options 462.5. And the max price here again is minus between the difference between 2 is 2.5. Right now the max price for this debit spread, it says debit here, is 1.7. So your risk reward is not very good. So oftentimes in this case we want to widen the spread. So in this case, let's take a look. We actually use 440 to 460. So let's go back. We use 440 to 460. So you go down to select 460. When we entered this contract, it was at $6, and now it's at 15.33. But just for tutorial purposes, let's assume it's still $6. And then you can just choose limit price. And you can, again, use the make this order expire the same day or good until cancel. And then if everything's good, just hit confirm and send. Then you're going to buy a long call debit spread. On the other hand, if you're betting on Roku will go down, you can do something very similar. Is right click on buy on the put side, which you're betting the stock price will go down. You click on vertical, and then now you're going to see a put. And it's debit. So basically it's a long bear put debit spread. And the first leg is 440 minus if you choose 430, then that means the difference, $10 is the maximum price for this contract. And right now, because Roku is going up, nobody's betting it down. This long bear put debit spread is so cheap. It's at $1.23. Your max profit will be $10 per contract. However, if you look at the Roku chart right now, the Roku has a strong momentum to the upside. Definitely not a great time to short it or buy puts on it. The other way to trade just want to highlight is if you want to sell a vertical put spread. So in this case, you long Roku, right? So you can sell the bear put spread. So basically, it will be a credit spread. In this case, you'll have to do margins. Again, if you look short, you think Roku is going to drop, you can do the same thing. You can sell the vertical spread. And here's a sell long call credit spread. So that means you're betting Roku will go down. And again, the maximum profit for this contract will be the differences between these two. So, but again, will require some margins, and we don't usually use it. The other way to trade is use butterfly. So if you want to construct a butterfly, right now Roku is traded at 470. You think Roku next week is going to be let's say close at 480 by Friday, 490 by Friday. You can just right click on a 490 strike price. Instead of using single vertical, go down. You're going to see butterfly. Click butterfly, and butterfly basically has 3 legs together to combine into one contract. Basically, it's 2 vertical spread being combined. So you can see here you have one long call options at the lowest strike price, and you sell the 2 call options here 490, and then you buy the last highest leg at 495. So the maximum price for this butterfly spread will be achieved by the expiration date July 30th, when this underlying asset, here's Roku, closed at 490. And how much is the max profit? And the max profit is 490 minus 485, or 495 minus 490. Here, both equal to $5. And currently, this butterfly spread is traded at 23 cents. The max price is $5. So if you can accurately calculate a Roku by next Friday, July 30th, on the contract expiration date, traded at $490, then this butterfly contract will be $5, and they pretty much give you about 2,000% return if you get it done right. So that's why butterfly can oftentimes offer such a cheap contract, and if you can calculate the range correctly, you're going to make really decent profit. However, the bigger range you make, for example here, instead of $5 max per contract, you make it $10 per contract here, increase the spread, then you're going to see the contract price is going to be a lot more expensive. Here's almost five times more expensive, but your chance of success is also higher, right? Because if butterfly spread, if Roku is close between 500 and 480, pretty much you're 489 to 481. 490. If Roku expire 499 and 481 by Friday, pretty much you're going to make money. So the wider the range of butterfly spread is, the more chance you're going to succeed. But your contract premium price will be higher. On the other hand, if you're betting on Roku will go down, you can buy a put butterfly spread. So same thing on the put side, right click, buy, and then you can do a butterfly, and then you can choose the range you want to do. Here, if you're betting on Roku, let's redo it again, buy butterfly. So here you have to choose a higher strike price. So you have to do like 470, 450. Let's make the math easier. Let's do 460. So pretty much the maximum contract profit is 470 minus 460, or 460 minus 450, which is both equal to $10. And you only need to pay 1.1. And if Roku expire on the contract expiration date July 30th, traded at 460, then this butterfly spread is going to maximize price at $10, almost give you a 900% return, since you only pay $1.18. So yeah, this is how you buy the butterfly put spread. And same thing, you can sell the butterfly call, or you can sell the butterfly put. Both will require you to have put some margins, so it's usually more complicated. For the sake of simplicity, I oftentimes just long butterfly call spread, or short long put butterfly put spread if I'm betting on this underlying stock will go up or down respectively. So yeah, that's just a high level how to buy vertical spread and butterfly spread. Any question, feel free to reach us out on www.moneypigtrading.com, and make sure to like this video. That will really help our channel tremendously. And make sure to follow our YouTube channel. Thanks for watching. I'll see you guys next time. Bye bye.